Good morning, everybody. Welcome to the start of a brand new week. It's the 8th of August. We're Signal Centre talking ball. I'm Joe Neighbour, joined by Jamie Pakenham-Walsh. Good morning, Jamie.
Morning, Joe. How you doing?
Yeah, very well, thanks. You?
Yeah, good. Thanks. Had a nice, relaxed weekend, so I'm ready to get stuck into another week.
Excellent. That's good news. So no Steve this morning. He is not around, but he'll be back tomorrow. So in the meantime, Jamie and I will talk through the latest headlines and have a look at how stocks and markets are setting up for the week ahead. So let's get stuck into the headlines first of all. What's been moving over the last weekend? And over to Friday as well. So we had the jobs number out on Friday, the non-farm payrolls, and we did get a bit of volatility in markets as a result. The US non-farm payrolls increased to 528,000 for July, which was well above the consensus forecast, more than double, which was at 250,000. And there was a revised number to 398,000 from a previous reading of 372. So all pretty good on that front. The unemployment rate, however, did edge lower to 3.5% from 3.6, which was actually below market expectation. So it was a little bit mixed. However, there was a slight decline in participation rate, with household surveys recording a more subdued increase of 179,000 in the number of employed for the month. The US yield moved sharply lower. There was strong data, obviously, as we saw on Friday, and that hit fresh concerns over the inflation threat. The Treasuries dipped sharply after the US jobs data, with the one-year yield increasing to a peak above 2.8%. 2.86% before a slight retreat to 2.83% on Monday. The hawkish Fed rhetoric ahead of inflation data has continued. In comments over the weekend, a Fed governor stated that inflation is much too high and she wants unequivocal evidence of inflation cooling before changing her outlook. In this context, she stated that she is seeing few, if any, signs of peak inflation, and further rate hikes of 75 basis points should be on the table until evidence of weaker inflation pressure is forthcoming. On Friday, also, we had Canadian jobs number. We saw the employment number decline there. The Canadian jobs data recorded an employment decline of 30,000 for July, compared with expectations of a smaller increase. And the unemployment rate, however, that held pretty much in line at 4.9%, which was in line with market expectations. In terms of the Bank of England, the chief economist Pill stated that the bank is attempting to maintain an element of flexibility in its decision making. In this context, the bank wanted room for manoeuvre to either continue rate hikes or engage in a pause in the hiking process, given the very high degree of uncertainty. He added that markets should not assume that there will be a further 50 basis point hike at the September meeting. So a bit of mixed stuff going on there. So let's get stuck into some charts and have a look at how they're lining up for the week ahead. So we're going to start off in Steve's absence by taking a quick look at Bitcoin. So here's the daily chart. In fact, let's start off with a weekly chart just to see what's going on there. So as we've discussed on a number of occasions, we've got this big double top pattern that formed on Bitcoin, and we saw prices break quite convincingly below that back in June, and since then prices moved as low as 17,567. We're in a corrective phase at the minute, heading up towards a retest of that newly formed resistance around 28,732. As you can see here, volumes, they're sort of mediocre, nothing really to get excited about on this uplift, which would indicate that maybe it isn't going to be that strong. If we take a look at the daily, we can see prices were forming a bit of a triangle pattern on the daily chart. We broke above that, we pulled back to retest it, and prices are continuing to move higher. We've got this resistance here we've highlighted at 25,338, and we also have a downtrend at that point as well. So this should be quite a key area really for Bitcoin to test, and we'll get a good indication as to whether or not the bulls have the appetite to push that higher, or whether or not that's just going to prove to be a corrective move to the upside before a continuation lower in line with the dominant trend. Let's take a look at the oil markets now. So this is WTI. We had a really large double top pattern form here. We broke down through support around 93.10, and prices continue to move lower to the 61.8% fib retracement level at 86.70, and support has been found. We're on the front foot today, up by 1.8% as things stand. So now what we'll be looking at on a technical basis is a retest of this newly formed resistance at around 93.10. So it'll be interesting to see what sort of reaction we get there, whether or not the bears are going to step back in and drive this lower. The double top indicates lower prices. The measured move target actually of this double top is down at 58.16, which is below these major support levels we've got here between 61.69 and 62.23. So on the back foot there for oil on the longer term setup, and wouldn't be surprised if we do get lower prices, but cannot rule out a correction up towards this 93 zone in the fairly short term. Taking a look at silver next, this is working out quite nicely on a technical basis. So as we know, prices have been trending lower. We saw some consolidation here before a breakdown. We then saw a retest of the resistance, and then prices continued to move lower towards a key 61.8% fib level in the longer term. As a result of the dollar weakness that we've seen in recent weeks, we then saw a decent correction to the upside, but only as far as this swing low here that was posted in May earlier this year. We saw a pretty decent breakdown from that level, and we've now seen quite a nice retest of it, and prices unable so far to get above that. We are consolidating, so maybe we'll see a fresh push to the upside, but a lot of this will hinge on what the dollar index is doing, and we'll take a look at that in a moment. Looking at gold, we can see that's trading in a bearish channel. We saw prices find support at the 61.8% fib level. If we scroll back to the left, we can see these yellow arrows here highlighting a major level of support going all the way back to March 2021. And it's done a really good job of supporting price for a very long time, it would seem. And again, we saw a really nice reaction from that level. And then we saw some decent buying take shape up towards some key resistance around 1786. So we've got the bearish downtrend coming into play. We've also got this horizontal resistance. We saw prices reject at it initially. We need to see whether or not it's got the appetite to break through this channel and continue heading higher. But overall, the trend remains pretty bearish. If we scroll out further, pretty choppy overall. So wouldn't be surprised if we continue to see more range bound action. But the next step for the bulls on this would be to try and break through this downtrend channel. And if that can occur, then we may start to see higher prices. So just flicking through these quite quickly today. Obviously, we don't have Steve to give us a bit more of an in-depth look. But if anybody wants anything specifically looked at, please give us a mention on the TradingView stream or YouTube, wherever you're watching. And we'll do our best to cover as many markets as possible. So moving on to the dollar index. So as we mentioned, and we saw this in the precious metals market, we've seen a correction in the dollar, which has then prompted these precious metals to move higher. Overall, the trend in the dollar index remains really positive. Just get rid of that arrow. So we were looking for a correction lower. We saw some support come in at the 50% fib level. Bang on that level, we saw the posting of a bullish outside candle or an engulfing candle, which formed on the 2nd of August. It looked as though it was going to then break out of this minor consolidation pattern and continue higher. We saw some choppy price action. Obviously, we've had the jobs number out last week, and as a result of that, we actually posted another bullish engulfing candle last Friday. Price is a bit muted today, but we need to see whether or not this break higher or this engulfing candle that we saw on Friday is going to continue carrying this forward. I certainly wouldn't bet against it, given the fact that the overall trend still remains very positive on the dollar. So taking a look at euro US dollar, that rallied into a cluster of resistance levels between 102.78 to 103.40. Prices rejecting at this level. The downtrend still remains the dominant theme here, and it looks as though we're potentially rolling over here to the downside and may go on to retest those lows that we posted back in mid-July, which is around parity. So that was pretty well defended last time round. It wasn't necessarily a big technical level from a price action perspective, but from a psychological perspective, we know that markets like to target these big round numbers, and that was certainly the case with euro US dollar, with parity being so well defended. So another move down to that level is certainly not to be ruled out. Take a quick look at cable. It's getting a bit messy here as well. So overall, trend remains lower. We saw a wedge form on the daily chart, and prices broke quite nicely from that to the upside. So that may have indicated a correction taking place, but we've rallied into a 50% fib level from this move here, from the highs in May to the lows that we posted in mid-July, and the 50% fib level here has done a pretty good job at containing prices. So in terms of support, arguably there's some around here at 20.56, seems to be holding for the time being. If it fails to hold and we get a close below this on the daily, then a move back to those lows that we posted in July is looking quite likely. So some pretty choppy price action there in terms of what's going on with cable. Let's take a look at some of the other US dollar markets and also yen, which I'm quite interested in as well. So we saw a breakdown in dollar yen. It broke down through this really impulsive move higher. We saw a break of the trend. We saw a really bearish candle posted there on the 28th of July, and then prices continued to move lower towards this key support around 131.25. Did a really good job of holding back the bearish threat, and then prices have rallied higher towards resistance at 135.56, which is where we find ourselves now. So I think if we can get above this and take out this candle that we posted on the 28th of July, which is very bearish, then maybe we'll start to see a continuation higher towards those previous highs at 139.39. Yeah, still looking pretty strong overall, but there is some threat of this maybe forming a top pattern. Still needs to do a little bit more before we're convinced about that, but something to keep in mind. If we take a look at euro sterling, just because I found that quite interesting as well, really choppy price action for a number of months, but you could argue there's some sort of head and shoulders top forming here. We saw a breakdown through the neckline of this on the 27th of July. We saw prices finally stabilize around 83.36, but the rally has taken it up to arguably the neckline of this head and shoulders pattern. So I've actually drawn the pattern taking into account the wicks that we saw. So there's some key lows here, but if you take it from a closing basis, then maybe there is some resistance on offer here. It's also around 50% of this Marubozu candle that we posted on the 26th of July, which can also act as a resistance level. So potential there for lower prices following the rally into that resistance level there. So I'm going to move on to some indices now. Let's take a look at DAX. That posted a shooting star candle on the 4th of August, which we highlighted here. We saw not really any follow through in either direction on the 5th. Today we're on the front foot, up by 0.63%. If we can take out that high that we posted on the 4th of August, then that would indicate potentially higher prices. Maybe we'll see DAX continue to trade within this range and we can start targeting the upper end of that range, which comes in around 14,809. So if we can take out that resistance there at 13,795, then we could be on for higher prices in the short term, certainly on the DAX. Take a look at the NASDAQ. That is approaching downtrend resistance here. It's also just above a 38.2% fib level of this entire move here from the 22nd of November down to those lows on the 16th of June. So a pivotal level here. I think if we can see a breakout, then that may attract some further buying interest in the short to medium term. Overall, the trend for us, I think, still remains quite negative. Still looking at this large top pattern. Let's just bring up the weekly chart to show that. So we've got this large top pattern here that formed. We've got a big band of resistance, which the price is actually above at the minute. So that is a pretty encouraging sign. Volume wise, fairly healthy, but overall it is trending lower. So be aware of that. This move higher hasn't been on particularly higher volumes, so that could indicate that it's not being very well supported. As we mentioned last week, it may be that a lot of the institutions are still waiting to see what happens here before they get involved, and you'll know when they're involved because the volumes will start to increase quite dramatically. So for now, I think just need to be a little bit cautious about that with these US markets. Let's take a look at the S&P 500. Let's just take a look at the daily here. So we broke out of a corrective channel, which is nice to see. We saw a break of a triangle pattern as well, nice pullback to the support at 3946 before the buyers stepped in and pushed price higher. We're into a cluster of resistance at the minute, arguably a little bit above it. We've got a 61.8% fib above at 4254. So that will be the next upside target if prices continue to maintain this strength that we've seen over the last few weeks. So looking pretty good there, but again, a bit of caution about the longer term picture as we approach these resistance levels. FTSE 100, that's rallying close to a 78.6% fib level. That's from this high here that we posted in April down to this low that we posted in June. Fast approaching that level. Be interested to see what sort of reaction we get there. FTSE is a little bit of a market out on its own really at the moment. A lot of influences from the US in terms of the dollar and of course commodities such as mining stocks and oil and gas stocks. It's got a lot of banking exposure as well, which obviously in a higher interest rate environment, they are going to thrive because they get to charge more on lending. So this is being propped up really well, probably the best performing index out there at the minute, but overall not really making a huge amount of progress for us to get too excited about. Fast approaching a resistance, be interested to see what sort of reaction we get around 7515. That'll do from me, I think, Jamie, unless we get any other people pitching in and want to look at some markets, but I'll hand it over to you and you can talk us through some stocks.
Cool, thank you, Joe. We'll start off how we usually do with our biggest gainer and loser for Friday. So taking a look at CPS, Cooper Standard Holdings, which had a nice 69.58% move. Looks like it was off the back of earnings, but we'll have a quick check of that. Cooper Standard reported Q2 sales jumped to $605.9 million from $533.2 million a year ago, and that beat average analyst estimates. So a really nice move off the back of that news. HCAT is our biggest loser today. Health Catalyst, this was down, what are we saying, 37.88%. And it's right there at the top. Health Catalyst post Q2 loss. Lowers outlook, planned share buyback, stock down 7% after hours. It was down a lot more than that during hours. So yeah, a pretty rough day there for HCAT. Let's have a look at the broader market, what we see for Friday's session. So obviously we had some jobs numbers out, and it was largely a pretty muted day, honestly. You can see a fair bit of grey amongst all the different stocks. The one thing that stands out though for me is Tesla, which was down over 6.5% on the day. We'll dive into that and have a bit of a look later. But other than that, not too much to shout about. We will check the weekly performance of the S&P, and that looks much more positive. All the big names seem to be up a couple of percent. The one sector that seems to be struggling a bit was this health technology. You can see a fair bit of red stuck in there, and energy over here as well. Again, a fair bit of red. So yeah, interesting at the moment. We know AMD had a really big week. That was up 12.8% on the week. But yeah, so a pretty good week, but a muted Friday. And let's get into looking at some of these weekly charts to start with. First one, let's take a look at Apple today, and let me bring up the weekly chart, because what I think is interesting and something I've been paying a bit more attention to recently. We've obviously had 5 positive weeks in a row now where the price is closed higher than it's open. But what's worrying me somewhat, I mentioned this last week, is look at the volume drop off we've had. So on this rally, which started here on the 5th of July, we have seen 5 weeks of volume under the 20-period average, which suggests to me that perhaps there's not as much behind this rally as we'd like for a proper turnaround. We obviously had this pretty aggressive selling, and I mean, you can see here on this downward leg here, we had the volume increasing, and the red days show that the heaviest selling weeks actually have more volume. So that's something for me to pay a bit of attention to. But regardless, you know, prices moving up, just one to keep an eye on. AMC, we'll look at this on a daily chart because this finished Friday really, really strong, up 18.86%, which looks like it was off the back of earnings, but we'll have a quick look at this. AMC has retained market share gains post solid Q2 results. So yeah, 18.86% isn't too bad. We can get rid of this now. We obviously talked about the idea we put out for that, but a pretty nice move, and it's kind of a case of where we're looking next for AMC on the upside. To me, it's pretty clear next line of resistance. I'm sure we'll see some more selling before we get to that level at $33.92. But yeah, we've broken above all of the main resistance now for me, which kind of we did have a bit here. We broke through that, and obviously a while ago we had this resistance as well. We got through both those levels, so next target, like I said, about $33 on the upside. AMD, why do I care about this? We saw this break above our our channel last week, and we did close above it on the weekly candle with volume starting to pick up, and that's largely off the back of the earnings we saw come out. But the same thing can be said again that we're saying about Apple. This kind of period here, which started that rally, that 4-week period, really low volume, and last week was only really saved by earnings, which certainly a more positive sign than what I'm seeing on Apple at the moment in terms of the volume, but it's still something to be very aware of. And I won't keep banging on about it, but I do think it's important to keep your eye on all that. Beyond Meat up 21.89%. Again, this looks like an earnings move. Let's have a quick look. 21% overnight after saying it was eliminating about 4% of its workforce in response to consumers cutting back on their purchases of the company's plant-based protein substitutes. Alright, there you go. Yeah, a nice move there. Really big engulfing candle, engulfing like what the past 2 or 3 weeks trading, so volume picking up. Still not too much to love about this. We're still in this pretty aggressive downtrend, but a better week there for sure. Coinbase, we obviously saw this had a really nice move last week with 3 really positive days, and not a bad day on Friday either actually. Did gap down slightly but closed higher than the previous day, so all in all not horrible. It looks like we've got earnings coming out for that tomorrow after close as well, so that could give us a bit of a clue on the direction of this going forward. Disney, I know why I wanted to look at this exact same thing, but I'm hitting on it again. Look at this volume. Got a bit of a rally, but no volume behind it at all. That's enough. I'm not saying anymore. GME, we're at this pretty key resistance level. Obviously, we had the stock split a few weeks back. I said I was going to stop saying it, but again, pretty low volume on this last week's rally. We are at this resistance level, but we are seeing some higher lows being put in place. So perhaps a good sign. And if you really want to nail down, the volume did pick up on Friday's trading as well. Meta, we've been saying this for a while too. We're trading within this range. Tried this breakout a couple of weeks ago, came straight back in, and since then it's still pinballing around. I don't know when we're getting out of this. Hopefully soon. It's getting boring. Moderna, what are we saying here? The resistance held up on Friday. Was it Friday? Yeah, it did, because we almost broke through. We got the breakthrough on Thursday, but we sold back into it on the Friday. So on a weekly close, you can see that we closed below the resistance line, pretty much like right on it, in fact. So we'll see how that opens up the week, but this is one for a while where the volume's been dropping off. Actually, even on the sell-off, the volume's been down. Obviously, the big volume was in this during the vaccine period, where it was all kind of new and entering the market. So since then, we haven't seen as much trading in Moderna. I think that's pretty much it. We did say we'd hit on Tesla quickly, so we'll do that. Let's get down to a daily chart. Yeah, it gapped down at the end of last week, 6.63% as we said earlier. Pretty high volume too. Let's see if there was any news behind this move. It wouldn't have been that, because that wasn't last week. Trying to find this. Tesla. We got the stock split. Was this announced before? I don't remember seeing this stock split for Tesla, but I'm not surprised. Yeah, it looks like a stock split's coming up 3-1 on the 25th of August. Maybe that was announced recently. There's so much news to Tesla, I can't actually see why this had its down day. But yeah, 6.63% down. Let's take a look at some Fibonacci's before we finish off here. See where we're at. We almost hit that 61.8 fib, but we didn't quite make it there. And if we look at this on the upside, where we could see some more buying, taking a Fibonacci from the bottom, let me put in 38.2. So that 38.2 kind of coincides with that previous resistance. Might see a bit of buying at that level, but for me, sorry, this is a bit messy now, but let me zoom this up. I think this 50 and 60 to me look like better areas, being previous resistance levels that also act as support here. This kind of between 782 and 745, which is a pretty broad, actually, a broad
gap
area
as well there, Jay.
What this here?
Yeah.
Yeah. So we've got a few things happening there, don't we?
So we target the close on the day of that gap. The day before the gap, sorry.
Yeah, let me just get the right thing out. So what, just this, literally just on the 61.8 fib?
Bang on the 61.8, yeah.
Pretty nice level, and you can see that prices found resistance here as well, going into that move we saw on earnings. So that could be quite a nice level to look at. Watch some price action around there. Keep a close eye on this, and if we start getting nice patterns, whether it's just a single candlestick pattern like a bullish hammer or something like that, that could be a good area to get some good risk reward out of a move higher. So yeah, we'll keep an eye on that. Let's see how this week starts. A bit of a mixed bag if you kind of just look generally on the right. If we look at the percentage changes on Friday, some really muted stocks, and then a few that moved 18, 21%, 16%. So it feels pretty mixed right now. As Joe said, when we looked at the indices, we are getting towards that key resistance level, at least on the NASDAQ, that downward trending resistance line. And that's a really, really important level for the market generally. And if we do see some selling come in there, then a lot of these stocks, which seem to have rallied quite nicely, might start falling off pretty quickly. So yeah, we'll keep a close eye, and we'll keep updating you each morning as we do.
Great stuff. Okay, let's move it on to the gun to the head trades. I'm going to try and gloss over these from last week because they weren't very good, unfortunately. But basically, what we do on the video each day is it's just for a bit of fun. We pick a trade idea live on the stream and hope that we can make a decent return on that particular instrument between now and 9 o'clock tonight. Each of the ideas must have a stop and a target, so they're all risk managed, and we do close them off at 9 p.m. or when the stop or the target is hit. They're all placed at market, and if anybody wants to check them out, please feel free to do so. You will find them on our TradingView profile, signal_center, and they're all there for you to see. So we did 3 trades last week. I went short of Euro Sterling. Jamie went short of Ethereum, and Steve bought oil. It was a volatile session around 130 for the US jobs number, and unfortunately it meant we was all stopped out in those trades. So I won't go into the details. You can check them out if you want, but obviously it's not something to brag about. So you know, there's no hiding behind this, which is, you know, part of the fun. So 3 new trade ideas today. Jamie, is there anything that's caught your eye at all? I was just looking at the FTSE actually. As I mentioned, not really a fan of this market in general because it's quite a difficult one to trade. But what was really grabbing my attention with this was this candle that's been posted over the last hour. So we've actually gone to try and test these resistance levels from the 4th of August. We've had a little bit of a look above it and then completely rejected, and now trading on the lows of the session. So is that going to trigger some momentum for a continuation lower? If we were to sell at that current price with a stop above the high that we've just posted, let's just shift this over a little bit so you can still see the candle, then I'd be looking for some nice risk reward on this potentially. But that's the first support I've got, and it only gives me 1.5, so I'd have to go quite aggressive with the target, possibly down to this region here. So we've got some lows in this region here to target, and that would mean a move down to 73.75, which gives me just a tad over 3R on that one. So I haven't got much time to look through anything else. I'm just going to go with that, I think, based solely on that candle that we've posted over the last 28 minutes.
Nice, Joe. Yeah, it's looking good. Hopefully we get that close around where you're setting the level, because obviously we've got half an hour left on this hourly candle. But no, it's looking nice. I like the look of that.
Yeah.
Right, I'm taking a look at, let me put it up quickly. I'm looking at XRP today, so Ripple. And what I'm seeing here is a series, look at these well drawn out blue curves, a series of higher lows going into this resistance level. So we obviously had a bit of a double bottom type formation here, and then look, higher low, higher low, higher low. In the 7 o'clock hourly candle, we did get a bit of a break above before we saw a bit of selling. But to me, I'm just going to play off the back of these higher lows and look for a bit of a break above this level. So I'm keeping my stop pretty tight, but it's just underneath this previous low. And if we get back down there, you know, it kind of invalidates my idea. Just keep it as tight as possible there. And yeah, so I'm kind of a little bit preempting the move, but we did have this close slightly above resistance. And I'm going to hope we do get a move higher. So we are going to buy Ripple at current price, which is, oh, my eyes are so bad. Let me get rid of this because I can't actually see which one the price is. There we go. 0.3774. It's 49. I'm going to make that 5. 0.77. What did I even say now? 0.773. Okay, well, I'm on it. Brilliant. and we'll keep our stop at 0.3710, and we're going to target these kind of resistance, this resistance up here, which is where prices wicked off a few times. We suggest there could be some pretty aggressive selling there. So that is going to be at 0.3943, and that gives us a 2.7 risk reward if we do see that move play out today.
Best of luck, Jamie. Those are going to be posted onto our TradingView profile right now. So if anybody wants to check them out and follow them throughout the trading session, please feel free to do so. As mentioned, we are coming up with these trade ideas as if we had a gun to our head. So time pressures and not a lot of thought, well, not thought, but not a lot of process gone into these ideas. So we're just throwing them out there based on where we feel there could be an opportunity between now and 9 o'clock this evening. So feel free to check them out. In terms of what's going to move markets today, we can have a quick look at the day ahead. So we've got the Eurozone Centix Investor Confidence number, which is due out in just under an hour. And then tomorrow, or not even tomorrow, on Wednesday, we've got US consumer prices. So the latest read on inflation, which will, of course, be very important for the next move from the Federal Reserve with regards to interest rates and trying to keep inflation lower. So that will be really important, and as it stands, looks to be the biggest number out this week from a macroeconomic perspective. In terms of earnings, as Jamie mentioned, we've got Coinbase out. There are a number of others. Just looking at sort of the on our calendar, the most anticipated earnings. So today we've got some energy companies. We've got Dominion Energy. We've got Tyson Foods. We've got AIG, who are obviously pretty big, and a few others in there as well. Tomorrow we've got Block, which has been quite well traded, hasn't it, of late? Ralph Lauren, amongst a few others. Cruise Company, Wynn Resorts, so a lot in the travel and leisure sector. Walt Disney and Prudential on Wednesday, and on Thursday we've got a few others as well. So nothing particularly mainstream, I would have said, in terms of where retail traders like to focus their attention. But if you are involved in any of these stocks, do make sure you are aware if the companies you're involved in are reporting earnings, because that can create a significant amount of volatility. So that's my trade idea there. That's going to be posted up in a moment. And Jamie, I think that's pretty much it today. Unless you've got anything else to add?
No, all good from me. You're away, aren't you, tomorrow, Joe? It's just the last one we'll have you for the week.
Yeah, so I'm off tomorrow for a week. Steve will be back, and we may get Taff along later on this week to join in. He's one of our senior analysts at the company, which yeah, be good to get him involved on the videos too.
Yeah, awesome. Looking forward to it.
Cool. All right. Well, have a great day, everybody. We'll be back tomorrow, and until then, please trade safe.
Thanks, everyone.
Goodbye.